Hey guys, Sam here. We're mid-morning on what are we? Tuesday, January 9th. Got some members interested in a look at OMG to the dollar tether. So I've got that up here. This is the 4-hour on Bittrex. So you can see this is where it hits. This is September, what is that, 15th? That's where it hits Bittrex. So we get this we get a 5-wave sequence down. Interestingly, it is technical. So if you see here, here's the 50, we go right to the negative 23. So you do have technical trading right off the bat. Now, working from that low, and all I've done here is just wick off the low, we've got a 5-wave sequence, right? It's fairly easy to spot. Now, there's some complexity to it, and it draws an inevitable conclusion that what we have here, it's a completed 5-wave structure, but since we get the deep overlap of the wave 1 here, we have a leading diagonal, which implies that what we are looking at is a wave 1. Now, so looking at this is where you have to ask yourself whether or not you're going to trade Elliott wave or not. Because that might be inconvenient to you to think that I want to get long here. You're telling me it's a wave 1, so that means I've got to wait for at least a 50%. Yeah, that's what I'm telling you. If you're not long, or if you are long, this would be an area where you might want to be looking at taking some profit, or if nothing else, tightening up some stops if you're holding long positions, because by what I see here, we've got a completed leading diagonal, which implies this is just a 1 wave. So if I back it out here, let's go out to the 8-hour. Now, we don't have any reference material for where it could go. This is the first move up. So if you put that in the largest degree, so if I go from this and I call this my 1 wave, and I'm looking for a 2 down here, I got a lot of upside. So let's go up several degrees. We'll go up to a primary. Okay, so that's what that looks like. It would appear that is just the 1 wave. We're going to look for a 2. As we always do, we look for it between the 50 and the 618. That's the highest probability for which to find a 2. And we're going to look for some subdivision on the way down as we get there, so that we can have some confidence in it. But we've got plenty of upside here. So if this is a project you like, it's hard not to like what the chart is telling you, assuming you're going to apply Elliott wave theory to it. So, as I see it, I would not be wanting to hold longs here, nor would I want to be adding to longs. I'd want to be protecting longs if I had it. But let's break this down. So we can take this off, all right? So we can maybe prove the case as to whether or not this works and that it fits. So I'm going to go all the way down to a 1-hour, and we can get a look at this, and you'll see how I come to that conclusion. So I got to do a little scrunching here, so bear with me while it reloads. Okay, so there we go. So you can see here, so here's that low that I wicked off and the pull that I just made. So we'll take that off. So again, fairly easy to spot. So note here, we get overlap of the 1. So we have a leading diagonal into the 1 wave, abrupt, steep 2nd wave. Here's the big 3, very deep 4, and then we get some complexity here. We get a complex correction. So just to reiterate, leading diagonals, per Elliott theory, only found in wave 1 or in the A wave. It's a fight to establish a new trend, which is why you see the overlap in the 1. If you just think about it, it kind of makes sense. So, we're trying to establish a new trend. Sure, ideally, you'd like to see an impulse right off the pivot low that you're working from, but that's just not what the market often will give you. So we get this leading diagonal into a 1 wave, and then the very sharp 2. Well, then here's the big action, but look how quickly that's all given back. So that this is crypto. You got to deal with the volatility. So if you're looking there, well, so first you got to say, well, does that make sense? So, if this is the start of it and this is my wave 1, I'm going to project from my 2. If I pull this over, we take a look at it. If I can get it right on there, this would be statistically an extreme for a 3. We get between the 2618 and the 300. That's pretty steep for a third. Interesting, from here you can see, look at the reaction we get at the 1618, 175. That's the highest probability for a third. But that's likely, so of course we have subdivision here, so you can see a 1, 2, 3, 4, and then we go up for and note we end, just barely. We end with a 1, 2, 3, 4, 5. We actually end with an ending diagonal into the third, so that would be the fifth of the third. I know it sounds confusing, but that's the rule set, right? So you either embrace it or you fight it and ignore it. It's really up to the individual trader. As I've said many times, it's not mandatory to be successful in the market. Certainly, you can just work from fib poles and market geometry, working with median lines. But I propose to you there are real advantages to incorporating it into your trading. So if for nothing else, we can just look at this and go, well, that's the third wave. It's the strongest wave. We know again from Elliott theory, the third wave does not have to be the longest wave. Most typically it is, but it just can't be the shortest wave. And if we look here, it looks like here with the fifth wave, may very well be longer. So if we're projecting here from the second to the third, and we go to the fourth, right? So we're already, so that might give you some pause there. So you think, okay, because if you didn't know that little caveat to the rule, a lot of people, that just take a casual look at Elliott wave, say, oh, okay, the third wave is always the longest wave. Not true. It can't be the shortest wave. So we note up here, so this is kind of interesting. So we're right at the 1272. That's the square root of 1618. It's commonly found in Elliott wave theory. But here's the 100% of the length of the 3 projected from the 4. So this fifth wave is the longest wave. All right. So now a few things to note here. We get this very steep. So this is Elliott's rule of alternation. So we get this very simple, it's almost straight down. Although if I blew it up, I promise you there's 3 waves in there. So we get a very simple correction in the second. So rule of alternation, we get simple, we go into complex. Now, it would look like you've got an ABC, which in fact you do. You have a 3-wave subdivision here, which I propose to you is the A wave. But then we go into this little choppy zone here, and we can't call this a one. Well, I suppose you could make the case that you have 1, 2, 1, 2, 1, 2. That's not what I think we have. I think we just go into this. We go into this kind of triangle, and I'm cutting off a corner of it. But let me. Here's if I can get this to hot. Here's what I think we get here is this kind of a wedge pattern here, right? And then we get the very deep two. So what I propose, and it does matter, as to where we're picking the pivot, but I think we get an A, B, C, D, E here to complete a complex correction into the fourth. So technically, the fourth is right here, right? So that's what I see. Again, 2 Elliotticians may come up with a different count there. I think that works, and the fact that we've hit a pivot here, you might argue a little bit about, what you've actually got here, but I see from this pivot low, which I propose is the fourth, I see a 5-wave structure that completes technically, right? So it's always a matter of sort of validating your idea with technical pivots. Are they technical? Well, this is very close, and that's a judgment call. It does not, if I blow this up, it does not overlap. It's very close. Here's the pivot. Here's what I propose is our 4. From the DE, here's the pivot, here's the 2. It's close. And I don't love this action here because it takes a 5-wave subdivision. So we'd have to pull it as an A, B, C. It's not the prettiest second wave I've ever seen, but it works. So let's pull out and see if from that progression does it stay technical. So if we work from that too low, and it's a little tricky to get in there. If I work from that too low, what do I see here? Okay, well, if we're going to play it as a 1, 2, 3, well, I can see I get subdivision so I've got just what I'm looking for into my third wave. then you can see we get a head and shoulders up here, right? So if you're traditional chartist, that's fairly easy to spot. So left shoulder, head, right shoulder, neckline, right? For you traditionalists, there's the neckline, breaks it, down we go. So where's the highest probability zone for a fourth? Between the 38 and the 50, and there's our Vegas wave offering some support. Here's the one wave high. We don't overlap that, so we're finishing in an impulsive structure. So we can do a couple of things. Additionally, we're trying to validate this pivot. Well, here's the negative 618 from the algo pull here. Here's the 23. They blow right through it. Up they go to the negative 618. So we can measure the length of the wave 1. Here, it's got to be right on it, to the length of, the length of wave 1 projected from the 4 low. So here you can see why I have this little hot box up here. So we have this nice confluence zone where we have the negative 618 and the 2.618 for a fifth wave high. Gives me confidence in that pivot, and then I come right into the hot box. Now, that doesn't guarantee that we aren't going to just scream higher, but it tells me that the odds are that we have a completed 5-wave sequence. So let me pull some of this off since we've got this all wicked. Now look as I open this up, knowing that we had that technical confluence up here. Look at the reaction that we get. Coincidence? You tell me. You make your own call, right, as to whether that's coincidence or not. I would tell you that's technical trading. That's algos taking profit. Where do we go? Right to the Vegas wave. So could this now, right, if we open that up, could this well be an A wave? Now we're putting in a B. We're going down for a C. It's going to need to go deep, right? Because I proposed to you that that's a 1 wave. So if we're going to go, if that's a 1, we're going to start looking for the next entry long at a 50% of the entire move. So if that's the A wave and we're putting in the B here, we got some more work to do to finish the C if we're going to get down to 50% of it. Now the other thing you would want to do, of course, is to look for some market geometry, and I can kind of look at that and tell you you're likely to spot it. So we're looking for as much confluence as we possibly can at that pivot to confirm the idea that we have completed a 5-wave sequence. So if I'm gonna pull from the 2 up to the 3 down to the, I'm going to go to the lowest low here because that's how an algo would trade it, right? They're not going to add a complex Elliott wave correction into the 4th. They're just going to work from pivots. So that gets my attention as well. So here's here's the corner pocket trade, right? So now this is a very deep move down here, granted, but there it is. That's Andrew's median line trading principle number 1. If you identify the correct 3 pivots, we have an 80% probability. If those hold, we have an 80% probability of making the median line. We don't get there. We don't get there. Finally, we get to the median line. So that's if you took that, if you drew the median lines there, you had to get through a lot to get there, but bang, there you are. So the rule proves valid. So that increases yet more evidence that we have a potential pivot high here, which increases the idea that we have a completed 5-wave structure that is a diagonal that tells me we have a 1 wave. So if that's a 1 wave, we got to wait for the 2, which is going to be a bit of a wait, right? It might annoy you that you have to wait for that. You don't do what you want. But I'm telling you, I wouldn't approach it. I wouldn't consider it until we get down to the 50%. Why? Because that's the highest probability zone, and that's all we get as traders is probabilities. That's the highest probability zone for a second wave. So if this is a completed 1, and I don't know that it is. I propose that it is. My hypothesis in analyzing this chart is that we've got a 1 wave that is completed, and I'm going to wait for an ABC before I think about getting long again. Right? I mean that's how I trade it. Right? So that's where the Elliott wave can be advantageous, or it could just be annoying because you just want to trade swing to swing. For me, I wait for the probability zone. So I've got a pretty abrupt A wave. Now, I recognize that in crypto, we're seeing a lot of these truncated C waves. So what if we get there? Would I take the trade? I'd think about it if I had good subdivision in that C wave, but I'm really, if I'm, looking to take a meaningful position, see if I take it here. All right, so if you take it here, because we get a truncated wave, let's just assume, let's hypothesize that we get that. Okay, so we get this, and we see it in crypto all the time. So we get to the 38. Well, so where's your stop? All right, so if you're going to take it here, is your stop going to be under the 65, or are you going to put your stop under the 50, which is the highest probability zone? So if you take it here and it comes down here, you get stopped out here. Well, that's, so you took a stop. I mean, that probably, not going to blow your account up. But, so then you're stopped out. It's just typical with trading. When you make a mistake like that, you force a trade, you rush a trade. It'll do this overnight when you're away, or when you're away from the market, and then it'll take off. That's just the kind of the perversion of the market. It'll do that to you. As I view it in my mind, what that is, that's punishing you for not waiting for the high probability zone. The market punishes mistakes 99% of the time, and if you make a mistake and get away with it, it's actually a real negative because it reinforces the bad habit. So I would tell you. I'd rather, miss the trade. If it ends up doing this, I'd rather miss the trade. God, there's no shortage of things to trade. I'll wait for what I like. I'll wait for my high probability zone. If it does this and takes off and we rip to new highs, so be it, right? Next trade. Wait. My premise to you is wait for your trade. Wait for what you like. There's no shortage of trading opportunities in crypto. The problem in crypto is there's too much to trade. Really. So why force something? Why take something that's not statistically advantageous to you? Just because you're impatient? Because I don't know. Maybe you've got insight into what's going on in OmiseGo, and you're just going to take the first pullback. To each his own. But for me, I wait. All right, so that's what I see there. It's interesting that it's been very technical. I mean, this was a little tricky in here, but then look, as we come out of it, we go back into a perfect five-wave structure. All right, there you go. All right, that's 60 minutes. I'll wrap it there. Be back to you shortly.